the first article that we're going to talk about is from Keith Weinhold. And Keith is making the point that, as these adult milestones continue to be delayed, rents, people are renting longer, and that means there's more demand for rent over time. So essentially, these are, if you're looking at this graphic, we're looking at people hitting these milestones at 30, right? The first is 83% of 30-year-olds in 1985 used to live on their own.
Right.
Now, 67% of 30-year-olds live on their own, right? 77% of 30-year-olds in 1985 were married or had been married. Now, 45% of 30-year-olds have been married.
Wow.
59% of 30-year-olds in 1985 live with a child, right? So like had a child or were raising someone's child. Now 36%, right? Precipitous drop. And then here's the doozy, right? 48% of 30-year-olds used to own a home, while now only 29% of 30-year-olds own a home. And then there's one number in these milestones that's going the other way, and that is having a bachelor's degree. In 1985, 25% of 30-year-olds had a bachelor's degree. 43% of 30-year-olds now have a bachelor's degree. GC, when you see these numbers, what are you thinking?
I mean, I just think of this incredible wave of people that are acting differently and behaving differently now. And from the investor lens, when you see these huge swaths of populations that are changing from 80% to 65% or from 50% to 29%, you want to situate yourself in having something that new buyer behavior wants.
Yeah.
Right? You want to situate yourself in something that 30-year-old who now is doing something different today than they were 30 years ago or 40 years ago will want. And that is a ton of new and different demand than what was present in, the 80s or the 90s that were not there. So this was already moving in this direction of an increased rentership society.
Yeah.
But now there are a lot of additional factors that are promoting this rentership society.
Yeah.
The fact that technology allows us to be a lot more mobile and we can work wherever we want. We're less tied down. Well, rentership allows you to be less tied down.
Yeah.
And then there's the affordability challenge, right? Buying a home today, if you look over the last, 5 years, is so much harder than it was the previous 10 years to that. And so when it's harder to buy a home, everybody still needs a roof over their head. That is a natural segue to kind of promoting the rentership society.
And kids are still graduating making about 48 grand a year.
Yeah.
Right. Yeah. So there has been this kind of like overall super increase in home prices, and there hasn't been that big of like increase in starting salaries coming out of college. So like add that to the idea that way more people have college degrees. There's more student debt. Income hasn't really kept up.
Yeah.
So it just takes a while to save up for home. It took me for a while. I'm one of these people that finally bought my home at like 40 plus.
Yeah. Everything you're saying is very real. Incomes don't typically keep up with home price growth, and definitely not over the last 5 years, right? Home price growth over the last 5 years is probably, 40% or close to 50%.
Yeah.
And, incomes, of course, have not kept up. But even in normal times, it's really hard for incomes to keep up with home price growth, especially because in the United States, we are undersupplied for housing.
Yeah.
And generally, we keep our interest rates, I'll say, artificially low because of a lot of things that we do from a government perspective.
Yeah.
And so you have that increases demand, you have low supply, and home prices tend to outpace wage growth. So it's sort of always kind of been that way for the last, 30 years or so.
Yeah.
But now it is exacerbated.
Yeah.
And everything that you just mentioned there, if you take the baseline here, which over the last, call it 20 years, there has been this move towards preferring to rent, even if everything was held constant.
Yeah.
And then you add all those components on to that, it really has, promoted this rentership society. And so then as an investor, whatever you're investing in, if there's something that's a dramatic movement and there's a huge population of people that now demand something they didn't otherwise demand, renting properties is that dramatic movement that's happened over the last 30 or 40 years, and especially over the last 20 years. People just don't look at owning a home the same way they used to, which creates an opportunity as an investor to own that home, because unless you think that people aren't going to need a roof over their head, they're going to move to renting. That increases renter demand, and ultimately that makes your profit centers that much better.
Yeah.
Something else to think about is, let's equate this to normal traditional investing speak. Well, rental income and cash flow is a dividend, right? It's a dividend.
Yeah.
So the fact that we're sitting here and we're looking at how much your dividend has grown as a percentage basis in all parts of the country is noteworthy. That's what makes this asset class really great to invest in. It's not like if you go to other asset classes and there's a built-in dividend growth model, right? The dividend is what it is. It's going to be here. It's going to be that way, most likely 3 years from now, 5 years from now. It's not like there's really an opportunity for that dividend to grow 10% or 20% over the next 5 years. So you have built-in dividend growth model here, which is unique. And again, one of the reasons why buying and holding this asset class makes so much sense.
Makes a lot of sense. So let's talk about these local numbers, GC. The rent data in Jacksonville right now. You put this together. Jack's median single family rent price right now is $1,820. Single family rental rent price appreciation year over year right now is at 0.2%, so flat. Average rent price right now for JWB is $1,535, showing that you're in that workforce housing sector, right? You're slightly below what the median is. 1,500 JWB homes rented this year, right? That's people that you signed into a new lease.
That's right.
In the last 12 months, rent collection rate at 98.2% and early termination / eviction rate at 0.4%. And this big whopper right here, this idea that you guys have collected 98% plus for 42 straight months. What do we want to take from this data, GC?
This is just a healthy performing rental market. And there's a lot of noise out there in all sections of the world and the economy and whatnot. Affordability is a real challenge, but the rental market in Jacksonville just continues to work. It's because supply and demand are in the favor of owning rental properties right now. There's demand challenges coming from affordability, but there's demand opportunities as well because we are in a growth market. There are supply opportunities as an owner of rental properties because we are undersupplied. So all of that coming together, you have an opportunity when you invest in real estate to separate yourself from the noise and all the craziness that's happening in the rest of the world, and just know that for decades and decades and decades, rents have worked, right? This is not something that you need to watch the stock ticker and think about when one world leader says one thing and it has an effect on another world leader and countries and unfortunately going to war and conflict. That's not changing the thesis here that people need a roof over their heads, and that with great property management, you can create a situation where somebody is really happy as a resident, continuing to pay rent, high rent collection over 98%, high lease renewals, low evictions, and then ultimately deliver a very consistent asset for a rental property owner. And at the end of the day, that's what we continue to see. Yeah, I just love comparing real numbers between rents, population growth, and median income. Those are the three. Well, if you think population growth and median income, those are the two inputs that largely wag the dog of rent price growth or rent price appreciation here. And it's very telling if you look at different parts of the country, what's happened. So I actually pulled the numbers. I did 2021 until 2025, and I did rent price growth, population growth, and median income growth. And I pulled some of the different parts of our country. So we looked up San Francisco and Seattle. And we looked up to see rent price growth for San Francisco. San Francisco's rent price growth since 2021 is the lowest in the country. That's why I put it there. And if you think why, well, then you look at population growth. Well, population is basically flat. And a whole lot of people have come into this country since 2021, and a whole lot of people have moved to different places. Not many people additive to the population of San Francisco.
In the last 5 years.
In the last 5 years, right? Their incomes have gone up, actually more than I expected. They've gone up 19%, but that's because it's San Francisco and Silicon Valley, right? So you still have median income growth, but you don't have people living there, so you don't have the demand. And then ultimately you have the lowest rent price growth in the nation, since 2021. Seattle, Washington has 11% rent growth. So that is actually, I think, one of the lowest, maybe bottom five of rent growth. So Seattle, another major city, a beacon of our country here. But ultimately what's going on there is you've got population growth, which is actually pretty normal. About 5% population growth is pretty normal if you look across the US. actually a little bit higher than the US average, but their median income growth is really low. So if you think median income growth and population growth are the two inputs that largely lead to rent price growth, well, their median income growth is struggling. So ultimately, that's going to keep rent prices down. Then you can look at Washington, D.C., another one on the lower side of rent price growth. So 17% rent price growth since 2021. Kind of normal or average population growth, and median income growth, sort of normal, a little bit below what the national average would be. Boston, kind of similar, right? About 20% rent growth, population growth around 4%, and median income growth around 21%. So if you don't see anything noteworthy as far as population growth or median income growth, you're probably going to be on the slower side and a laggard when it comes to rent price growth. And that's what we see in some of our major cities. But then you compare it to Jacksonville. And little old Jacksonville, we've had 25% rent price growth, with especially compared to 9 or 11% for San Francisco and Seattle. That's a whole lot more dollars that are coming to owners of rental properties here. And the reason is because we have two things. The two inputs are really working together. We have 9% population growth since 2021. We're actually the sixth fastest growing population just 2024 to 2025. So we're actually speeding up our population growth in Jacksonville, because the story's out.
And we're the fastest in Florida, right?
We are the fastest in Florida. Absolutely. So that's that demand part of the equation. And then you've got the median income, which supports that demand. Median incomes in little old Jacksonville have actually risen more on a percentage basis than San Francisco, Seattle, Washington, D.C., and Boston. In order for you to own that property in 2020 or 2021 in San Francisco, probably cost you over $1 million to own it. 22% median income growth. And we're just on the doorstep of all the great things that we talk about downtown, the University of Florida, the Stadium of the Future, our Pearl Square neighborhood that's really a catalyst for additional median income growth. So little old Jacksonville's far outpacing some of our major metros, and it makes sense. People have a flight to quality, and in terms of quality for where they're living, they're looking for quality of life and low cost of living. And Jacksonville checks those boxes.